Assalamualaikum. Today we are going to present the segmental and interim report of Genting Berhad Company. This video presentation is prepared for Sir Sheikh Husairi bin Tuan Azam. Here are the team members that anticipate in this presentation. The first part is company background. Genting Berhad is principally involved in the investment holding and management company. It was incorporated in 1968 and listed in Bursa in 1971. Genting Berhad also was formed by the late Tan Sri Lim Goh Tong in 1965 when he started the journey to realize his vision of building mountaintop resort in Malaysia. The Genting Group comprised Genting Berhad and its listed companies such as Genting Malaysia, Genting Plantation Berhad, and also Genting Singapore Limited. There are also unlisted subsidiaries, that is Genting Energy Limited and also Resort Las Vegas LLC. In the core leisure and hospitality business, Genting Group and its brand market affiliates offer a suite of products under a number of premium brands, including Genting, Resort World, Genting Grand, Genting Club, and also a Star Cruises. They have also tied ups with established names such as Universal Studio, Premium Outlets, Zoo, and also the Hard Rock Hotel. The next part is vision and mission. Genting Berhad vision is that they focus more on leading multinational corporation committed to enhancing shareholder value and maintaining long-term sustainable growth in their core business. If they have vision, they also have a mission too to achieve, that is, to be responsive to the changing demands of their customers and excel in providing quality of product and service. The second mission is they have to commit to the innovation and the adoption of the new technology to achieve a company advantage.
So the first one is nature of business activities. A company can present its business activities in a variety of reports. If a COD employs more than one set of segment information, other factors may designate a single set of components as an entity's operating segment of a corporation, including their business activities management and information submitted to the board. Next is existence of managers responsible. An operating segments manager is directly accountable to and in regular touch with the chief operating decision maker to discuss operating activities, financial results, projections, or goals. Segment manager is a role and not a specific title. Some operating segments, one manager can oversee multiple operating segments. And for the last part is information presented to the BOD. So the characteristic may apply to overlapping sets of managers responsible components. This is a matrix structure. Some managers are accountable for worldwide product and service lines, while others are responsible for geographical areas. The chief operating decision maker evaluates both sets of components, operating results, and financial information.
Assalamualaikum warahmatullahi wabarakatuh. My name is AHMAD bin MOHAMMAD. So for the next part, I will talk about management approach. So there are three factors to consider to have a segmenting reporting.
Okay, for the next part is type of segment. Genting Berhad also provides our segmentation reports on the operating segments in the annual report. According to MFRS 8, operating segments requires the entity to disclose information to enable users of its financial statements to evaluate the nature and financial effects of the business activities in which it engages and the economic environments in which it operates. Thus, Genting Berhad has provided the information regarding the geographical information along with its segment analysis. So the segments are leisure and hospitality, plantation, power, property, oil and gas, investments, and others. That's all from me. Thank you.
The next part is about the chief of decision making and its responsibilities in the company. Chief Operation Decision Maker is a function, but not a title. This function allocates resources to elevate a property segment. Chief Operating Decision Maker is COO, COO, and also senior management, or also the board of directors. The title of CODM is irrelevant as long they make strategic decision about the entity segment. In this case, Genting Berhad has Tan Sri Lim Kok Teh as CEO and Chairman. Mr. Tan Koh Hang is the President and COO and the other Board of Directors as the Chief of Decision Making of its company. The responsibility of CODM is to control the management committee, thus operate decision. Operating segment is CODM review entity component. In practice, defining operational segment depends on how much the CODM aggregate business unit operating result. CODM also will receive and reveal information on individual and group business unit operating result to make decision and also to assess performance. Thank you, that's all from me. Now I will pass to the next presenter.
So, there are two steps to identify whether a particular segment can be reported or not. The first step is by applying the 10% threshold test. A segment can be considered as a reportable segment if it meets any one of the following quantitative thresholds. The first one is revenue basis. The reported revenue of a particular segment, which consists of both external and internal revenue, must be at least 10% of the total revenue of all operating segments combined, which also consists of external and internal revenue. Next, the profit basis. The profit or loss of a segment is 10% or more than the combined profit or loss of all operating segments. Finally, the asset basis, in which the assets of a segment are 10% or more than the total assets of all operating segments combined. Segments that do not meet the 10% threshold test will be allocated in all other segments in the segmental reporting. So the next step is to apply the 75% rule. An entity needs to ensure that the total external revenue from all the reportable segments is at least 75% of the total revenue, which includes both external and internal revenue. If the 75% rule is not met, additional segments can be identified in order to reach the 75% mark, regardless on whether they pass the 10% threshold test or not. Next, we are going to apply the two steps discussed earlier to reproduce a new segmental report. The Chief of Decision Making of Genting Berhad had decided to use the revenue basis in order to determine the reportable segments. The weight of each segment is calculated by dividing a segment revenue that consists of both internal and external revenue with the total revenue of all operating segments. By applying this, the result shows that only 4 out of 6 of the segments can be reported, which are leisure and hospitality, plant, power, and property, since they pass the 10% threshold. Next, we need to apply the 75% rule by dividing the external revenue of the reportable segments with the total revenue of all segments combined. The result from this calculation of 90% shows that the 75% requirement is met. There is no need to identify for additional segments to fulfill this rule. Hence, the amount of reportable segment remains the same. So finally, this is the newly constructed segmental report after eliminating the intra-segment revenue.
Okay, the next one is advantages and disadvantages for segmental reporting. For the advantages of segmental report, the first one is transparency. Transparency is basically one of the most important benefits. In this case, Genting Berhad has several categories of business operates. Segment reporting can disclose which areas are profitable and which are trends on the bottom line. Okay, the next one is give better conception of the financial statement. Segment reporting enables Genting Berhad shareholders to gain a better conception of the variances that may affect overall numbers. For instance, the report showing where does the earning coming from and can help shareholder to determine whether the earnings are sustainable or instead. Okay, another advantage is lower cost of capital. The risk of investing in the stock of a firm that reveal all information is theoretically lower than the risk of investing in the stock of a company that withholds information. Okay, next are the advantages. Okay, there are some advantages that need to be highlighted, which are data manipulation. Okay, the segmental reporting and information can be manipulated as well as it may be reported through the view that management want the users to see. For example, if the data is presenting in the true management style, segment reporting lends itself to data manipulation. Okay, the second one is place a strong prominence on the present. Segment reporting can place too much of focus on short-term numbers. Company report their segment using short-term data and neglect the long-term figures, although knowing that this can give the long-term impact to their business. The last one is based on segmentation. The split of this diversified organization for segment reporting purpose is a basic challenge that emerged in segment reporting. Segments can be created in a variety of ways depending on the segmentation base. It is also difficult to identify the segmentation.
Assalamualaikum everyone, my name is Muhammad ZAIM bin ZAFFRULLAH, and I'll be continuing the part B, which is interim report. It consists of basis of preparation of the interim report, accounting policies, type of interim report used, period current and comparative, and finally adjustment proposed. So in this slide, I'm going to get into details about basis preparation of the interim report. First, integral method is used as basis. The second one will be the preparation of the interim report must refer to the para 9.22 of the Bursa Malaysia Securities Berhad listing requirements. Next is full interim financial statement for the year ended. It is basically prepare a summary form of a company income statement, balance sheet and cash flow statement that are usually combined into a single document. Lastly, condensed interim financial statements which the performance of the company before the end of normal year full year financial reporting cycles. Next, there are two accounting policies used in preparing the interim report, and the first one is MFRS 116, which is property, plant and equipment. The example for this is company use the cost, deduct accumulated depreciation, deduct accumulated impairment losses. Next, freehold land measure at cost and not depreciated. Next, depreciation of other asset by using straight line method. And the last one is gain or losses on disposal by comparing between the net disposal proceeds and the carrying amount. On the other hand, the accounting policy used in preparing the interim report is MFRS 140, which is investment property. For example, initially measure at cost including direct transaction costs and borrowing costs. Next, the recognize, which is for example when disposed or when the investment property is permanently withdrawn from use. And the last one is gain or losses on disposal are determined by comparing the net disposal proceeds with the carrying amount.
There are 5 types of interim reports prepared by the company. Genting Berhad prepared their interim financial report using first, condensed consolidated income statement, second, condensed consolidated statement of comprehensive income, third, condensed consolidated statement of financial position, fourth, condensed consolidated statement of cash flow, and fifth, condensed consolidated of changes in equity. In some cases, a statement of financial position at the beginning of the prior period is also required. The next is current and comparative period of statement. The current and comparative periods for each statement prepared by the company according to MFRS 134 interim reporting will be measured from 1st October 2021 to 31st December 2021, that equivalent to the 4th interim quarter of Genting Berhad in 2021. The first quarter is from 1st January 2021 till 31st March 2021. For the second quarter is from 31st March 2021 till 30th June 2021. For the third quarter is from 30th June 2021 till 30th September 2021. And for the fourth quarter is from 30th September 2021 till 31st December 2021. Next, we move to the process of constructing the interim report. For the current interim, the period is for 3 months starting from 1st October 2021 till 31st December 2021. And for the second part is for the comparative end of the preceding year starting from 1st January 2020 till 31st December 2020. Then we move to statement of profit or loss and other comprehensive income. For the current interim, the period is for 3 months starting from 1st October 2021 till 31st December 2021. For the cumulative year to date, the period is for 12 months starting from 1st January 2021 till 31st December 2021. For the comparative current interim is for 3 months starting from 1st October 2020 till 31st December 2020. And for the comparative year to date is for 12 months starting from 1st January 2020 till 31st December 2020. Then we move to statements changes in equity. For the cumulative year to date, the period is for 12 months starting from 1st January 2021 till 31st December 2021. And for the comparative year to date, the period is for 12 months starting from 1st January 2020 till 31st December 2020. And for the statement of cash flow, as we can see for the cumulative year to date, the period is for 12 months starting from 1st January 2021 till 31st December 2021. And for the comparative year to date, the period is for 12 months starting from 1st January 2020 till 31st December 2020. Lastly, we move to the last part. As we can see, there are two adjustments that has been made to the interim report. The first adjustment is Genting Berhad prepares the quarterly interim reports. In the fourth interim period of the financial year ended 31st December 2021, there was an impairment in its trade receivable. As at 31st December 2021, the amount of trade receivable is 2,582,900,000 ringgit. The company estimated that the amount will only be 95% collectible by year end. As we can see in the fourth interim report, the calculation of doubtful debt is 5% times 2,582,900,000, and the amount of 129,145,000 will be disclosed in the statement profit or loss. And the calculation for the trade receivable, the calculation is 95% times 2,582,900,000. The amount of 2,453,755,000 will be disclosed in the statement of financial position. We move to the adjustment 2. As we can see, the inventory price changes every year. The company had inventories of 644 million ringgit on 1st January 2021. The expected net realizable on 31st December 2021 is 641 million ringgit. So, the cost is 644 million ringgit and the net realizable value is 641 million ringgit. The conclusion is, on 31st December 2021, the value of inventories of 641 million ringgit should be recognized at its net realizable value as it is lower than the cost. Hence, the loss of inventories of 2 million ringgit should be recognized in the SOPL. Next, for the before adjustment, the current interim period of the inventories give the total of 644 million ringgit, while the period of comparative end of the year give the total of 572,200,000. As soon as the adjustment has been made, there is a slightly decrease example of inventories in the current interim period that give the amount of 641 million ringgit, while for the period of comparative end of the year, the inventories remain unchanged as the before adjustment has been made. And lastly, for the before adjustment, the current interim period of the trade and other receivable give the total of 2,582,900,000 ringgit, while the period of comparative end of the year give the total of 2,014,300,000 ringgit. As soon as the adjustment has been made, there is also a slightly decrease example of trade and other receivable in the current interim period that give the amount of 2,453,755,000 ringgit, while for the period of comparative end of the year, the trade and other receivable remains unchanged as the before adjustment has been made. So, that's all from us. Thank you so much for watching.